Thinking about buying a rental property? Here's what you need to know about financing that property. Hi, I'm Paula Flagg with Paula Flagg Homes. Today, I'd like to talk with you about the finance options for buying a rental property. The options I'm discussing today are for residential properties. That's between a single family home up to a 4 unit building. And if you're interested in commercial properties such as office space, retail, or housing with 5 or more units, reach out to me and I can provide more information on that as well. So you'll need to determine two main things up front. First, how do you plan to take ownership of the property? Two most common options are either in your personal name or in the name of a business like an LLC or a corporation. And you'll need to determine what type of money or financing you intend to use. Now, the four most common financing options are traditional loans, hard money lenders, private equity firms, and seller financing. Now, there are some other less common creative financing options available. And if you'd like more information about those, let me know. I'd be happy to provide you with more information. But first things first, how do you intend to take ownership? Now, there are pros and cons to each option. The biggest advantage of taking ownership as a company is liability protection. It is important to keep your financials in order, though. While the people who use this structure do so for the protection a company can provide, they often fail to manage the entity properly, which can pierce the corporate veil and expose you to the personal liability anyway. The biggest advantage of taking ownership in your personal name is that the money you borrow is usually cheaper. So basically, you get better interest rate and better loan terms, which could result in greater cash flow on a monthly basis or help you pay down the principal quicker over time. So the loan products you have access to will be based on the way you plan to take ownership. The first financing option is a traditional mortgage. Now, this is very similar to purchasing a primary home with slightly different criteria and terms. The advantage to this option is that you can often get the best terms. Usually, your interest rate is going to be about 1% higher than what you're seeing advertised for someone buying a personal home. You must purchase the home in a personal name, though. Now, with conventional loans, you're usually required to put down at least 20 to 25%. There is another option that you may have access to, though, and that's with an FHA or a VA loan. Now, FHA and VA loans require a buyer to live in a property to use the loan to purchase. So you wouldn't be able to do this for a single family home or a townhouse, for example. However, you can use these loans for a 2 to 4 unit property, and that allows you to live in one unit and rent the others. For VA loans, you're still able to put down as little as 0% on these properties. And for FHA loans, the down payment can be as low as 3.5%. The next loan options are with hard money lenders and private equity firms. Now, these lenders tend to have similar products, though the qualifications from company to company can vary greatly. That's going to be based mostly on their risk tolerance as a company. Now, the advantages of working with these lenders is that you can purchase the property in a company name, and actually, the lender will most likely require you to buy the property as a company. Now, the loan is based on the property's cost and the income it can generate, not your personal income. So, these loans are often called debt service coverage ratio loans or DSCR. You'll probably still be required to personally guarantee the loan, and some of your personal information will be considered, such as your credit score or how many rental properties you've owned in the past. Seller financing is a little less common and a great option when you can find a seller willing to do it. Basically, you and the seller agree on the payment terms that work best for both parties. And the options are really endless in this case. And then you'll pay the seller directly as agreed. The biggest advantage of this option by far is that you don't have to fit into a cookie cutter list of qualifications from a lender. This means you can have a lower down payment, you can make a lower monthly payment, you can have a lower interest rate. And a lot of time I see these arrangements having a balloon payment, which means that the total amount of the loan will be due at a specific time in the future, like maybe 3 years or 5 years. This gives you the opportunity to renovate or update the property to add value over the first few years that you own it. Then you can refinance with the lender now that you've built up equity, or you could just sell it and take the profit. Regardless of how you own the property or how you finance the property, I highly recommend that you have personal umbrella insurance policy. For only a few $100s a year, you can have millions in liability coverage. And this will make sure your personal assets are protected in any of these scenarios. So if you have questions about this or any other real estate topics, please feel free to reach out. My number is 202 670 5880, and I'd be happy to help. Thank you for taking the time to watch this video today. I hope it was helpful. And as always, thank you for choosing Paula Flagg Homes for all of your real estate needs.